Hey everybody, today is May 22nd, 2025, and today we're going to talk about the stock market and what I see the stock market headed for the month of June. Please read the disclaimer, and you can pause this video as you read it. Okay, so where we left off last time was in late April, right? And basically I said that my prediction was I thought we were going to chop sideways a little bit and build support before it went up higher, right? And the reason is that at that time, Trump hadn't reached a deal. He had his reciprocal tariffs, but he hadn't reached a deal with China yet. And so recently he announced a 90-day pause with China as they continue to negotiate. So that ended up having the market push up higher, right? And so that's really great. Of course, there still needs to be work to be done. They have to still finalize the negotiation, right? It's only a 90-day pause for now. But the point is that there's progress being made. And so the market obviously likes that. So the market went up a lot faster than I expected due to the news. Of course, I didn't know that they were going to do the pause, but it does seem like it's grinding its way up now. So what I see for the month of June, is that I do think the market will continue to grind slowly as it tries to reclaim the previous all-time highs. Now the market is forward-looking, right? So even though they don't have the finalized details, they might be negotiating over these 90 days. The market likely will continue to move up higher as it prices that in, right? As it prices in more positive progress or progress in general towards reaching a deal. So my prediction for the month of June, again, is probably going to slowly grind higher. Now, if they do announce a deal or if the Fed does cut rates, and we'll get into rates and interest rates later in this video, then of course the market can rip up a lot higher, right? So a lot of positive catalysts, a nice V recovery, and we can zoom out and we can look the bigger picture, right? So we sort of like push down higher, push down very quickly, and we hit these support levels, the 100 week, but we've since recovered almost like the pandemic, like very quickly above the 50 week now, but then sort of consolidating. But yeah, there's gonna be more details coming out regarding the negotiations of the tariffs. But let's go to CPI data, right? Inflation rate, CPI data is good. It's actually coming down again, right? And this was a concern that we had last year. We saw the rates sort of move slowly higher at the end of Q4 in 2024. But this year so far, we've seen a nice stable decline, disinflation, right? Or not disinflation, inflation rate coming down, right? And the most recent is 2.3. And even though it is only 0.1 down, it is progress still, right? And it's getting very close to that 2% target that the Fed has, right? And of course, the next report is going to be June 11th. But the closer you get to 2, the closer the more likely we are to see rate cuts, right? And that rate cut will be a positive catalyst for the market to push up higher, right? Of course, the Fed having paused rates in the last meeting. Let's look at some potential headwinds, right? So I've talked about this a lot in the last previous videos, but there is a recession risk, and this is something that people were talking about when Trump did the reciprocal tariffs, was that this would lead into the next recession. But thankfully, he's made progress on negotiating the tariffs, so we've had a nice recovery so far. But this is still something to think about, right? Every time we see, this is the yield curve inversion, right? The 2 and 10 year. Every time we see it in invert and then uninvert, which is it's been uninverted for a couple months now, right? It's been followed by recession, which is these shaded gray areas. So technically we've uninverted, but we haven't had an official recession yet. So this is something to think about, that we might have something either near the end of this second half of this year or perhaps in 2026, right? Second thing is the federal funds rate, right? Usually when the Fed cuts rates, and this is something I just talked about, right? As we see inflation comes down, the probability of the Fed cutting rate is going to increase. And when the Fed cuts rates after an elevated period of elevated interest rates, we tend to see it follow a recession, right? Which is a shaded gray area. So these are two potential headwinds. Now, having gone over those, I do think that overall the remainder of this year is I'm quite bullish and optimistic. Of course, we've seen this incredible market V recovery after Trump negotiated more of the tariff deals, and of course with the China 90-day pause, right? But we still need to see more updates come out that right. This is just a pause for now. We want to see them have more concrete progress towards getting a deal done, right? But as long as that's going forward, again, we're not going to know until they announce it, right? So they're probably still working on it. I do expect the market to front run it, and of course, with this incredible move, this incredible recovery, the market is pricing in a positive outcome to the tariffs, right? And also potential rate cuts in the future. So, well, that's what I'm looking for in a nutshell in June. Is that I'm expecting, or not expecting, I'm looking for CPI data to continue a downward trend towards 2%. And the closer we get to 2%, the more likely the Fed is to cut rates. That's going to put more upward pressure on the stock market. And also a tariff deal to be finalized with China. They're already finalizing deals with other countries, but China is really the one that matters the most, right? Because we have a lot of manufacturing from the US that comes from China. So that's affecting a lot of businesses, right? But yeah, I expect the market for the month of June to basically grind sideways and then try to push up towards all-time high. Barring any like bad news from tariffs or unexpectedly hot interest rates, unexpectedly hot inflation from CPI data that we'll see in June 11th. But yeah, just very quickly, we'll look at VIX. Of course, we've seen VIX come down significantly as the stock market has recovered. What else? The dollar has also come down significantly, right? So as the dollar continues to go down, that's usually inversely proportional to the stock market, and that should put more upward pressure. So just in a nutshell, I am optimistic going forward, barring a few potential headwinds, recessionary risks that I just went over. But yeah, for the next month, for the month of June, I do expect it to grind sideways and try to go for the new all-time high. So thank you for watching the video. If you found it helpful, useful, and informative, please subscribe and like this video. I appreciate your support. Thank you again and have a great day.